Hello friends, in the series on income tax cases, today we will discuss a very important case on section 41 subsection 1. As all we know that if an assessee do have some trading liability for which the assessee has claimed some expense in the previous years, and if the assessee has not to pay that amount, and if the assessee writes back that amount as a cessation of liability in its books of accounts, then that amount becomes the income of the assessee under section 41 subsection 1. The issue before Delhi ITAT-G bench in the present case was that if an assessee has to pay some amount to a person and that person writes off that amount as bad debt, so then will it make automatically section 41 subsection 1 applicable for the creditor who has to pay this amount? This issue has been decided by Delhi ITAT-G bench in the case of Saket Agarwal versus Deputy Commissioner of Income Tax, and this case has reference number of ITA number 6088 Delhi/2025, and the date of the judgment is 23rd March 2026. The facts of the case are like this. In the present case, the assessee do have a trading liability of rupees 55,60,599 rupees towards a creditor. When the assessment proceedings were going on, the assessing officer came to know that the creditor to whom the assessee has to pay that amount has already written off that amount in the bad debt in his books. So the assessing officer invoked section 41 subsection 1 in the case of the assessee by saying that since the other party is saying that now I have not to receive this amount from the creditor, so this means the invocation of section 41 subsection 1 automatically becomes applicable in the case of the creditor. So he added the amount of rupees 55,60,599 rupees into the income of the assessee. The matter came before the CIT appeal. The CIT appeal also upheld the order of the assessing officer. When the tribunal heard the matter, the tribunal said that in the present case, the assessee during the assessment proceedings have submitted the audited balance sheet of the assessee from the financial year 2020 to 2024, in which the assessee was showing the amount of creditor in its books of accounts as the liability. The tribunal said that it means that the assessee has not write off that amount from its books of accounts, and the tribunal said that the creditor writing off a debt unilaterally does not constitute a remission or cessation of liability for the debtor. The tribunal said that for invocation of section 41 subsection 1, it is sine qua non that the assessee must have obtained a benefit by way of remission or cessation of the liability, and since in the present case no such benefit has been obtained by the assessee in the present case, so section 41 subsection 1 cannot be invoked. Friends, whenever the assessing officer finds that there are some trade creditors into the books of the assessee and they are standing very long into the books of the assessee, they try to invoke the section 41 subsection 1 in one context or the another. Like in the present case, the assessing officer found that the party to whom the money is to be given has already written off that amount in its books. So he applied section 41 subsection 1. For this, my viewpoint of is that if the other party is saying that I have not to receive that amount, it does not mean that I have not to give that amount to the other party. Similarly, in some cases it has been seen that section 41 subsection 1 is invoked whenever the creditors are standing very long, and the assessing officers take the view that since 3 years have lapsed since the incantation of the liability, so now the assessee has not to pay that amount. So these type of invocation of section 41 subsection 1 is not justified, and in the present case also the tribunal deleted the addition made by the assessing officer, which was duly confirmed by the CIT appeal. At the end of this video, once again I am repeating the name of the case. The name of the case is Saket Agarwal versus Deputy Commissioner of Income Tax, and this case is has reference number of ITA number 6088 Delhi 2025, and the date of the judgment is 23rd March 2026. Thank you, friends.